Okay, let's try this again. Sorry about that. I was having some difficulties with the, for whatever reason, not that you care. For whatever reason, they'll tell me there's not enough bandwidth on the USB bus, so can't broadcast any video. So I'm doing this sans video today. Not that that really makes that big of a difference, because the most important thing is, you know, what's on the charts, etc. I could reset my computer, but quite frankly, I don't need to kill that killing my productivity today. That's about a half an hour process to get back up and running again, so let's just forget about it. Now, what's interesting is that we've seen quite a turnaround here. Earlier today, we were green across the board. The cash markets and the futures markets were green. Coming back from the lunch hour, this was all red. Now we're seeing some disparity here, some disconnect. We're seeing that the Dow is up, the NASDAQ and the NASDAQ 100 are down. The S&P and the Russell are up. VIX still down. Futures markets, mini Dow is up, mini S&P, mini Russell up. The NASDAQ 100 is down, but you know, not significantly. You know, 12 basis points or whatever at this point in time. Not having a great day today, you know, which is disappointing because have been consistently posting profits Friday, yesterday, the day before on Monday. Today got whacked by Wynn. And the news is that Steve Wynn is stepping down, resigning as chairman and CEO of Wynn, as well as Wynn Macau. So the stock has just rallied. At this point in time, I have to decide, you know, the additional risk on the table is about another $400 or $500. The decision I got to make is, all right, do I hang on hoping for a turnaround? Consider, you know, I've got to consider the fact that because this is 2 days away from expiration, time decay is a pretty significant factor. Do I make the time decay work for me and sell a put against this, a higher strike put? Don't know yet. Right now, I'm just focused on kind of cutting some of these losses through use of the futures, by trading the futures markets, which I did and I didn't. I had a really good trade in the NASDAQ futures that worked in my favor just before I came back on again. That was why I came back late, because I was managing that position. But that offset just disastrous trades that I made at the beginning of the lunch hour, actually, in the mini Dow. And I did what I tell you not to do. You know, I allowed myself to get whipsawed. I flip-flopped, and every time I did, it was towards the top of the move, or if it wasn't at the top of the move, you know, it would be moving in my favor, and I would get greedy, and it would turn against me, and it would move to a loss, and that just compounded. So one single trade in the NASDAQ was able to offset that. So I'm out of my hole now, at least from the futures standpoint. So I'm $85 positive minus transaction costs. So it's time to put on the discipline cap and be patient and focused and ride these futures for the rest of the day. The reason why I say that is because I really don't to be candid, I don't see any value in managing these options positions right now. I mean, you know, with the markets having turned green, Apple is improving. So I want to leave that alone. Autodesk, I just, you know, it's improved from where it was, so that's getting better. So, you know, these are both two positive delta positions, which I want to add delta to my view here. These are both positive delta positions, so with the market going green, at least for right now, that's a good thing. VWO has gotten better, now it's worse. It was bad at the beginning of the day, it had gotten a little bit better, and now it's back down to the lows of the day. And of course, Wynn. So that's kind of where we sit from Tim's portfolio, but let's turn away from that right now and take a look at what the futures are doing. I think that this, what has happened today with just this chop in the markets, and it's not like it's chop from the standpoint of it's really tight amplitudes. It's just it was a reversal from looking overwhelmingly positive to looking kind of mixed to looking kind of negative to back to mixed again. So I will reiterate what I said before, which was to tread cautiously, because these markets are very treacherous right now. Do not put on a position that you cannot get out of on a dime, because we're not out of the woods yet. I don't really care that volatility has come in so much. Volatility itself has been volatile. I don't think there's anything signaling an all clear just yet. This is like a pretty good time to get short on the NASDAQ. And not just because that was moving down, but because looking at the stochastics, I'm seeing weakening momentum. And you can see the magnitude of these moves and how quickly they are occurring. That this is a real battle right now. And this is not this spot that I'm pointing at right here, this is the volume profile. This spot that I'm pointing at right here, this red bar that goes across, that is the point of control, the developing point of control. That is where the mini NAS futures have been spending, where most of the volume has traded. It is not where these futures have spent most of their time. That's a different profile. This is where they spent most of their time. So because there's a lot of volume changing hands right now. That's why we're kind of stuck in this area, I think. So it's just going to be a question of when does time trump volume? Because there was a big spike in volume right here. Negative down, so the red bar indicates negative volume. Now the reason why we're seeing red, green, and blue bars is that this is a study called Impulse. Basically, it's a green bar if the MACD is higher, is better than, if the MACD histogram is better than the last bar, and a couple of other factors. I'll read it here in a second. The way that I've got this chart set up, that solid bars are actually positive bars. So here's the open, here's the close. The hollow bars are negative bars. Here's the open, here's the close. So that way we're not confused by color. Okay. The color of the bar is not telling you what direction the bar has moved. It's telling you what the impulse is. And I don't know whether Impulse is available on other platforms. Bars painted green if both MACD and EMA. If MACD and EMA are higher than those of the previous bar. Bars painted red if both MACD and EMA values are lower. And our bars painted blue if neither of those conditions is fulfilled. So if MACD and EMA are improving, the bar is green. If MACD and EMA are red are not improving, the bar is red, and if it's neutral, then the bar is blue. So right now we are seeing strength in the NASDAQ. So it tussled here at that volume-based point of control, and it's working its way back up again. So this might be a good time to buy this market, to buy this future. I think I would rather do that when I have evidence that if this full D is turned around and goes upwards, that's one thing. Right now, this full D is a drag because it's trying to move down towards that 20 threshold, towards that oversold area. And full K, I didn't call this full D, I called it something else. Full D, full K. Full K is trying to go the opposite direction. but it doesn't have enough strength to do so right now. So which one's going to win the battle? That's the question. Okay. Can't make tactical errors. Or TPO POC. It's making a move towards where it has spent the most time as opposed to the most volume. So that helped a little bit. One of the things that I found looking specifically at this 1 minute chart here is when your full K and your full D are either moving towards or in an extreme position, so near or at an oversold or overbought condition, at that level things get very dicey. It gets very choppy. Over time, as you can see here, it will move towards the condition it's leaning into, so to speak. But you are going to be subject to these extreme moves. So the point is, if you're in a position it's going to move against you, and it can move against you significantly, and if that makes you nervous, then you might panic out, or you might even stop out if you set a stop. If you set your stop too tight, the market has a nasty way of finding your stops to get you out. And so the thing now is, we're not exactly lined up across time frames. Bearish, bullish, neutral to bearish, bearish. So 1 hour, 15 minute, 4 minute. I shouldn't say this is really neutral, because yeah, bullish, but we're at a interesting point here because right now we're basically these histograms are these histogram bars are equal. They're very close to equal. We've got the full K and the full D heading in two different directions. There's a potential crossover that's going to happen. So this is a wild card here. Price action in the very, very short term, in the 1 minute term, is bullish. So that is not yet something that you want to sell into. On the other hand, it's not necessarily something I would buy into either. Another factor is when full K and full D are converging. That is not a good sign. That is a chop indicator. When full K and full D are diverging, that is a better sign. Another way to think about that is when full K and full D converge, histogram bars, they reduce in amplitude, but it also means more indecision, more chop. Right now, this is a potential crossover. When the bar closes, we'll know if it's a legitimate crossover or not. We have to weigh that against what's happening in this time frame, what's happening in this time frame. So yes, right now this is a sell indicator. But again, because we're so close to oversold in this time frame, I don't want to touch it yet. Unless I enjoy being whipsawed, which I do not. Remember how I was talking earlier about watching the behavior of this full D? And when you see it fluctuating between overbought and oversold, so in other words, between 80 and 20, imagine this being magnetically drawn. Once this crossover occurs out of oversold territory, this is being magnetically drawn to your overbought position. So that gives you a certain level of confidence that as long as this indicator tells you that you're still right, you're okay. If it takes a sharp turn downward, even if it's a gradual turn against you, it can temporarily move down. It can pull that momentum down, but inevitably it's going to before it hits oversold, it's going to gravitate back because it hasn't touched this yet. It hasn't completed that wave. It hasn't completed that journey. Why am I telling you this? Because of this. It hasn't gotten there. Here's a stalled rally right here. The full K crossed above the full D, and it got pulled back down because the momentum is stifling it. And right now what we're seeing on this 1 minute chart, what we're seeing on this 1 minute time frame is a pull away. But I don't yet want to play it Let's try this one more time. I don't yet want to play it because of this. I want to see something different happening here. We're at a similar point in the mini S&P. This convergence here, and this is playing out in chop right here. You can see that. The Russell is at least giving us something a little bit better. Here we're seeing a pull away. That's a positive sign. The fact that the full K is making a downturn here is certainly not encouraging, but the fact that the histogram is trending up, is trending towards improvement is good. We're seeing improvement here, although full K is a little bit oversold, rather overbought. So I'm not liking that. And I don't like this, right? Now I might be inclined to be a buyer of the Russell here, and here's the reason why. It broke out of this, I call this a coiling pattern. It's bouncing, and the area in which it has to bounce is getting narrower and narrower until it reaches a point of tension and then breaks through. Now you could argue that I need to pick a more consistent way to draw this, because in some cases I'm touching the bottom of shadows, and in other cases I'm touching closing points. So if I do that, let's say, okay, just touch the wicks or the shadows. So the way to play that is, once it closes, okay, I guess we're not going to cooperate. Never mind then. Sometimes hitting OK works and sometimes it doesn't. It defies logic. Okay, that really added no value whatsoever. Part of the problem is that the move to the upside was getting pretty extended in the 1 minute chart. So yeah, it closed above that trend line, but that may not be important, because now we've made a move all the way back to the trend line. So what's interesting is it came back down here and then bounced off of that, so it didn't go back into range. So now value area is just built higher. And what I mean when I say value area, let me take a study off here. Value area, this is the top end, this is the bottom end. In between these two ends, this is where 70% of the volume takes place, right? As more of the volume occurs at these higher prices, then it builds this audit. This is adjusting on the fly. So that's what I mean when I say value. This value area is building higher. This is not a good place to get long because of this. That needs to come down here. That there's a good spot to short, I think. I say that because value is building higher, but it's slowing down. So the market, if it moves to this spot and breaks through, then that's an indication that value is higher. If it moves to this spot and then retraces, that's an indication that value is not higher. So if I were to pick a place to short, it would be right around here. Yeah, that makes sense. Let's zoom in. One technique using this impulse study is you see these bars close green. If you watch it long enough, and you see these bars building value higher consistently, staying green, but then you see ticks flash, or you're seeing it flash blue. That is a signal that to me that momentum is weakening, and the volume bar, not just the candle but the volume, they're in lockstep, so you'd also see it here on the volume. If it trades up to that level, that's a good spot to short. If it closes and doesn't, I still think it's a short. In fact, now it is. Wasn't quick enough to capture the full move, but if you see what I did there, I figured if it were to break below this moving average, its next destination would be the bottom of this trend line, which it touched and then bounced off of. That's a good exit point. Right now, this is a market that rewards you for being right, but it does not reward you for staying in. That's going to be an interesting area right there. Because as new bars get put in place, if it's going to respect this trend line, it's going to run into this trend line here as well. What's it going to do? Because that tells you which way is it going to break. When you draw trend lines and they get violated, don't take them off your chart right away. Remember that prior resistance is future support. If I had said once it breaks this trend line, oh, you know what, time to get rid of it, well, then I wouldn't see this. I wouldn't be seeing that. Remember that whatever you're trading always respects levels of resistance and support until it doesn't. We're about to see another touch and bounce, I think. If I were to guess, that would be my guess. On the other hand, it could break through here. And that looks like it's exactly what it's going to do. This bar is going to close in 30 seconds. If it closes below that line, it's a short. It's a short. It hasn't closed yet, but it was a nice move. We'll see what it does. I could have set the target here at this moving average, but I was looking at the bottom of this bar here as a potential level of support support. So I wanted to be just above it. Even if it touches this level, like I've had it happen too many times where it touches my target and only a few contracts trade at that point and it starts to reverse, and then I miss out. I don't get a fill. I would have gotten a fill, as it turns out, because look, this is continuing to go down. Don't strive for perfection in your trading, just strive to trade well. Just because you think it's going to trade down to a level, even if it does, 1506, okay, so it trades down to 1506. You're not necessarily going to get a fill there. And look at this volume increasing on or increasing selling volume is what we're basically seeing here. So it has basically traded almost to the top of value area. It petered out. It crossed the point of control. It crossed these two trend lines. Is going down. It's making a move towards the bottom of value area. I kind of doubt we're going to see it develop, although it could. I just kind of doubt we're going to see it develop value area to the low side. It's conceivable that it does widen its range. I mean, certainly not unheard of. Okay, now it's zooming out to get a big picture. didn't really talk about what I was doing there, but what I wanted to plot out various levels of support and resistance because I kind of want to get. I mean, it's important to. It's easy to get myopic. And zoom in and only look at this. But you do that, and you miss all this context. You can't do that. One thing that can be difficult is when you find yourself, if you have different moving averages plotted on your chart there, as they converge and as you find your price bars between these moving averages, it can ping pong back and forth until it makes a definitive move one way or the other. When faster moving averages start to break away from slower moving averages, that's a momentum sign. This 3 period, this blue moving average here is 3 period. Now this was a momentum sign downward. It was breaking away from slower moving averages. This one being the 27, sorry, this one being the 9. But now it's moving back. It came down, hit this level of support, bounced off of it. And so now what it's looking to do, I think, move up. If it's able to successfully break through these levels, these bands of resistance and support, or rather bands of resistance, right now it seems to be successfully doing that. Actually, another area where it might falter is here at 1512. You can see that several bars close at that level, close or open at that level. As well as 1513. That really added no value whatsoever. One thing to be careful about if you put orders in, don't forget about them. That order was there as a profit target. I decided to set a closer profit target because of momentum faltering. If you forget about it and it trades up to that level, if I had left it there to trade up to that level, it would have initiated a short position, which if the price falls, that's great, but it doesn't always do that. So sometimes I have done that. Sometimes it helped me, and sometimes it's hurt me. I think that's where it wants to go right now. That green line. that exercise that I just went through right now, where I zoomed out, drew trend lines, drew levels of support and resistance with the red, the red level of support and the green level of resistance as a profit target. You're not going to be able to do that if you're flipping from future symbol to future symbol. If you're going to pick one that you're going to watch for a time, maybe it doesn't have to be the whole day. But if you're going to watch it, you're going to start to see what's happening. It's going to make you a better trader. It's one thing to have a group of symbols here that you kind of look at out of the corner of your eye and, oh, this looks interesting. This is shaping up to maybe be a potential short. Likewise here, the British pound or the Australian dollar. Seeing the big picture is great, but eventually you're going to have to drill down on a particular symbol. And this is starting to show signs of weakness. These 4 different moving average plots have all converged. It broke through, causing them to converge. It was looking like it was going to make a run to the upside, but it didn't. Now it's kind of pulled back into this little no man's land, or whatever you want to call it, event horizon. So here's what should give us pause. Across time frames. Full K and full D are converging across multiple time frames. We have bear, bull, bull, bear. That's a recipe for chop. What's it going to do there? Okay, I really don't feel like having this risk on the table while you struggle to make a decision. We got about 42 minutes left in the trading day. Dow's up 170, the NASDAQ 100, Dow's up 165, the NASDAQ 100 is down 36, the composite's down 21, S&P down 6, Russell down 5.2, VIX is down, but higher at the higher levels of the day. It's 24 right now. Dollar's up. VIX futures are also down. Dow futures are down, are up 233, so more than the cash market. Nasdaq, Nasdaq 100 futures are down, but not by as much as the cash market. The S&P is down, or is up 6, so that's pretty close. The Russell's up 5.3, and the Russell futures rather. So pretty close to the cash market. So we're seeing big disagreement in the Dow. Between the futures and the index. Gold's down, crude's down. Futures on the 10-year note are down. Bitcoin is back on the move up. For how long, we'll see. Yeah. 1514 is another line in the sand. Dow's up 206, Dow futures up 265. And now we seem to be backing off both levels of resistance here, the downward trend line as well as this horizontal trend line, or horizontal level of resistance. And this market is now signaling a short. Okay, that is ridiculous. You have a trackball that doesn't move. It makes it very difficult to do anything. It's new. It's a replacement too. So. Okay. That was not expected. you can see that these moves are very hesitant. This is not conviction. And unfortunately, I allowed myself to get sucked into it because I'm now sitting on zero profit in the RTY. I had a $220 profit that had just evaporated in the matter of about 10 minutes. When you get whipsawed by the market, it's not just what the market's doing, it's your psychological reaction to it. And when you fall into the trap of hitting reverse every time it turns against you, that's psychology failing you. That is me getting in my own way. And when you have a market that does that to you, the market is telling you loud and clear, I am not tradable right now. And if you don't listen to that, then you're not going to have a desirable outcome. The dollar continuing to strengthen, I think, gives you some clues. The turmoil that we saw in markets on Friday, stock markets in particular, on Friday and on Monday, had to do with the fear of inflation running rampant. The unwinding of the Fed's balance sheet and the prospect of interest rate rises perhaps accelerating under Jerome Powell is what is throwing this market for a tizzy. The market was loud and clear Friday, was loud and clear Monday, seemed to be loud and clear yesterday and this morning, but it's not so much anymore. And I think that the strengthening dollar is telling you what you need to know. That I don't care if the VIX is down 22% today. I don't care if it's down at 23 when it was as high as 38 or 50 in the after hours. I don't care that VIX futures are down at 20.63. I don't care. The point is they're elevated from what they were a week ago. These short volatility products handed people their head for a reason. The trade's over. And as that trade unwinds, it's going to have a ripple effect. Now, some of you might argue the trade is unwound. Is it? You don't think that the VIX hitting 38 was a signal for some people to get short again, VIX? Traders go back to what they know, what made them money, even if it means costing them their bankroll. It's just something they do. Every trader has a do not trade list, and if they don't, they should. VIX is on my do not trade list. It's gambling. It's a good indicator. I don't like it as a trading vehicle. Let's see if this move is for real. Qualified yes. Actually, right now this looks like it's got legs. I'm not panicking out because my 4-minute chart just confirmed a histogram crossover. 15-minute chart is showing a developing histogram crossover. My target right now is about here. I'm also seeing deteriorating stochastic histogram on the 1-hour chart. So time frames are lining up. It is 1:49 Arizona time, 3:49 Eastern time. Markets have another 10.5 minutes to go. And this is not a good time for my hardware to decide it doesn't want to work. So the fact that we're seeing it move against us, and now that move against us is deteriorating, it's important to note that the, what is this, 3-minute Wilder or 3-period Wilder average is declining. It's slicing through the slower averages. That's very telling. This is a situation where the bulls are exhibiting a little bit of hubris. The selling is just outweighing the buying right now. That was the closing bell. And right now, my charts are not reflecting what's actually happening. And it tends to do that when the volume is very high, when the price action is fast and furious. The chart just can't paint fast enough. It is also a known issue that my broker has acknowledged that they're fixing. So that is a situation that I've been told that since the 24th of January. So I think one of these days they'll stop sitting on their hands and fix it. So a couple of observations. One, if you got a piece of hardware that doesn't do it, that doesn't cut the mustard, get rid of it. You have to be able to, in this particular case, it's my trackball that I'm going to try. There's some little terminals with the trackball rests on. I'm going to try cleaning with some rubbing alcohol. That has worked in the past. But if you're dependent on, being able to move your cursor rapidly to where you need to go, and if I need to get here quick and hit flatten or hit Alt F, which Alt F didn't work, but if you don't have that trust, you're not going to trade with confidence. Goodness knows there's enough to be distracted by to shake your confidence without things that you can control. To allow things that you can control to be an inhibitor. The bears are squarely in control now. So let's recap what happened today now that things have kind of settled down a little bit. I mean, the Russell's still trading like crazy, but the cash markets have pretty much settled out. Basically went from green to red today, almost across the board. On the cash markets, the only index that is green, and it's barely green, is the Russell, it's up 5 basis points. The S&P is down 50 bips, the NASDAQ Composite down 90, the NASDAQ 100 down 1.26%, the Dow Jones down 8%, 8 bips. On the futures, the Dow is the only thing that's positive right now. It's hanging on by its fingernails. Now it just hit 0, and now it looks like it might cross over into the red, but it's basically called it flat. The NASDAQ mini NAS is down 1.24%. Mini S&P down 70 bips. The mini Russell down 22 bips. VIX futures down. VIX index down. Off the lows of the day, though, in both cases, the dollar is up, gold down, crude down, 10-year note, 10-year treasury futures down. I have to say that I really think the dollar is the thing to watch. I think that's your leading indicator right now. It's reflective of an observation that inflation may be getting out of control. It's a fear. Wage inflation is what the Fed has been waiting for. Be careful what you wish for, because sometimes you might get it. I think that the fear is that the Fed's going to unwind its balance sheet more rapidly than we thought, that's going to implement interest rate increases more rapidly than we thought, and that's going to derail a market that was growing, that was basically floating on air. The fact that the market deteriorated into the close tells me that today is going to be an interesting day. Or not today, tomorrow is going to be an interesting day. So the drama continues. Keep that shopping list. Keep crossing things off and adding things to that shopping list. I believe that the market is going to give us a greater return to fair value. Because of the way things ended today. So that's enough out of me. Let's go ahead and end the live cast right now. I'll be posting the PM Traders Espresso a little bit later, as well as blogging. So enjoy reading that if you tune in. If not, I will look forward to chatting with you all tomorrow. Thanks.